Welcome back to Mary and Mike's Homebuyer Class 101. And today we are going to be talking about home loans, credit repair, and getting the right kind of loan. Mike owns and directs Mata Mortgage Express, so he's really the expert here. I have experience being the realtor on the other end, and I always, of course, work for my buyer and want to make sure that they get the best loan and work with a qualified lender that cares about them utmost. So Mike, take it away.
The process of getting a loan is talking to a lender. The lender collects your financial information, including your taxes, your pay stubs, your W-2s. He's going to look at what your gross payment is, or your gross monthly income is, to help determine what you're qualified for. He's also going to be looking at your other bills. He's going to look at, do you have child support? Do you have alimony? Do you have credit cards? Do you have student loans?
Do you have credit card? What a question for an American.
All of that.
How many credit cards do you have?
Right. All of that goes into calculating what you can afford, what he determines you can afford. He's also looking at your credit score. The credit score is going to help determine what type of loan that you can get. For example, if your credit score is under 640, typically you're going to end up with an FHA loan, a government secured loan. The nice thing about government secured loans is they will loan to people with lower credit scores. The negative about them is that there's a pretty high insurance, monthly insurance charge, and there's an upfront insurance charge, mortgage insurance charge.
So you're saying that if you have a lower credit score because you haven't made, and to get a lower credit score, does that mean you haven't made payments on your car on time?
It could mean
how would your credit score be impacted?
Your credit score could be impacted by making late payments, by having too much debt.
Okay.
Sometimes it's impacted by not having any debt, not having any credit out there at all.
And that's a good point. I've had buyers in the past that are first-time home buyers, and because they didn't have a rental agreement with somebody, maybe they were renting from their parents or living with their parents, they didn't have a car payment, they really hadn't built any credit. So what we had to do is we worked with the lender, and the lender said, okay, Mr. and Mrs. Smith, you need to get a lease in place, and you need to get a bank account with a credit card, and you need to just charge $20, or $100, doesn't matter, $20, and pay it off. And then in 30 days, boom, they got some credit. So that's really important, is right. We want to help you know how to get through this process. And just because you don't have credit now, don't worry about it. You can get credit. Right. And you don't have to get into huge debt to get credit. Right, Mike?
Right.
Okay.
One of the things that the lender's going to do is he's going to look at your credit report. He's going to go through that and determine if there's ways that we can help you boost your credit score.
And do we have to pay? Do I have to pay you for the credit report when you run it?
No.
Oh, okay. Who pays for it?
We pay for that.
So Mata Mortgage Express pays for your credit report to be pulled?
It does.
Okay, great. So that's one cost you don't have to worry about, and you might have seen that on the internet that you would be charged for that. But our company does not charge you.
Right.
Thank you.
So the lender's going to look at your credit report. It's going to help you figure out ways to improve your credit score. Good. If you need a credit score improvement.
Right.
Some people have great credit. So if you have really good credit, we're going to be looking at conventional loans versus the FHA loans. Conventional allows you to put as little as 3% down. A lot of people think that they need to put 20% down on a home purchase. We can do conventional loans as low as 3%.
So you're saying that that's a fallacy, because we do meet a lot of people that call us and they say, I'm just sure I can't buy a home. I read on the internet that you need 20% down, and if I like a house for $400,000, oh my gosh, that's way too much money. I've only saved $10,000. So you're telling this new home buyer, and I already know this, but you don't need 20% down.
It's advantageous if you put 20% down, because then you're not going to have mortgage insurance. The less you put down, the more mortgage insurance you're going to pay.
Of course.
So because it's a bigger risk to the lender. The other type of loan that's out there is a VA loan. If you're a veteran, that's really the way to go, because a veteran VA loans require less down payment. They require, they're not as tough on credit scores.
Mm-hmm.
And
what's the lowest credit score you could have when you're a VA loan?
we've had VA buyers purchase a house with credit scores under 600, which is pretty low.
Yeah, so it's a huge benefit if you've been a member of the military or your spouse has been a member of the military. You do have the option of doing a VA loan. You can only use your VA benefit under one home at a time.
Right.
And then how does that determine the price of your house? Because I think that's the last little point we're going to talk about here.
But the lender's going to use that information. He's going to look at your gross monthly income. He's going to look at your monthly payments and determine what you can afford. And they're looking at your ratios. They're trying to determine your income versus your debt. So typically they want a ratio that's under 50%.
And then they're going to tell you, go shopping. They're going to call me. They're going to say, Mary,
right,
your client is approved. They've done all their paperwork. I've looked at their debt to income ratio. They're doing a great job and they've saved a little bit of money. So we're going to go with an FHA loan and they can go up to $450,000. Just as a guess. I'm using that as a reference. So call my buyer, you, and say, let's go shopping. So that's how we get it done in a short amount of time. And we thank you so much for coming back to our YouTube channel.
Right.
And that's why you want to call Mary and Mike to help you out. We're looking forward to meeting with you again. In our next topic in Buyer 101 is going to be
what kind of homes you can search for and searching for homes.
There you go.
That process.
That'll be the next one. We're thankful that you're here. Stay well and talk to you next time.